Um, okay. Hi, everyone. Yeah, sorry, just a little bit technical stuff. We're going to discuss the U.S. GDP data quarter on quarter, and yeah, according to Bloomberg, the forecast is at 1.9%, and the prior figure stands at 2.1% respectively. Uh, the Fed has closed a 7-year-long uncertain chapter in U.S. economic history in a unanimous decision on Wednesday. The Fed lifted target Fed funds rate to a quarter of 0.25% to 0.5%. The committee judges that there has been considerable improvement in labor market conditions this year, and it is reasonably confident that inflation will rise over the medium term to its 2% objective, the Fed said in its FOMC announcement. The forecast, I guess, from financial institutions and banks, top 10 economists that were surveyed by the Bloomberg, and according to their views, we see the estimate. So basically, the median estimate this time is 1.9, average one is 1.89, high estimate is 2.1%, and low estimate is at 1.5%. Respectively, whereas the number of estimates this time has reached 76. Yeah, so economists estimate that growth will be revised to 1.9 from last month's estimate, and personal consumption growth is expected to be revised down to 2.9 from 3%. And Credit Suisse says that since Q3 GDP's first revision, we have seen further downward revision to manufacturing and wholesale inventories. The latest data on Q3 durable goods shipments also are looking weaker, and newly released hard data on service spending suggests a downward revision to personal consumption on healthcare last quarter. Talking further, you can see the Dukascopy community members poll, where they were asked about the US dollar Japanese yen currency pair, and according to our community members' views, we have the bullish side was the majority this time, and we have a couple of bullish comments from Dr. TV and Evan Page. So Tiberius says that if we take into consideration the change in the monetary policy from the Fed and the rate hike projection for 2016, we should see improvements also in the most important indicator for the U.S. economy, which is the GDP. And basically, hi, news release. Evan pretty much says the same, backed by improving retail sales, construction, and the labor market. He believes the GDP will be at 2.1, with the U.S. economy increasing on key performance indicator. He sees a sparking bullish trend. And that's pretty much it on the fundamentals, and Max will be here on the whiteboard to cover the technicals for you.
Thank you very much, Polina. Hello, everyone. I hope you have a great Tuesday so far. So speaking about the technical part, first of all, I would like to mention or to repeat a bit that Polina has already said about the forecast. And since we have the average expectation, even though we have the average expectation of 1.9% for the third quarter GDP, the third revision, as you can see, last quarter the GDP was actually the final one was revised upwards, and the same happened last year in December. And that's why we also can see somewhat better number from the GDP, possibly 2.0% growth, especially in case the personal consumption expenditures surprise us to the upside in case it happens. That's why we have the positive surprise trading strategy today, and also because the euro-dollar currency pair, which we are discussing right now, has a very bearish sentiment right now, or of course it is bullish on the US dollar. As you can see, more than 55% of all open trades are bearish on the euro, bullish on the greenback, and the same goes for the pending orders, which are set to sell this currency pair in the vast majority of all the cases, more than 60% in both 50 and 100 pip ranges from the current market price. Also, the sentiment on the euro versus the US dollar is bearish in other markets, including Rwanda, Daily Forex, and Saxa Group. Speaking about the trading strategy itself, as you can see, the cross is currently trading at 109.55 level, which is just below the daily R1, the first resistance line for this currency pair, which, by the way, in case of a positive outcome for the dollar, may help in pushing the euro down versus the US dollar. Speaking about the possible market reactions, as you can see, the average reactions in the last 5 quarters was 14 pips. Not that strong reaction because the final revision for the GDP is usually not that volatile type of data, and now, especially as we have just had the Fed interest rate decision, possibly now all the data releases will tend to be not that important in terms of market reaction as the Fed has been already. But nevertheless, in case we take as the benchmark this average reaction of 14 pips, we can project the first take profit level to be placed around 109.30, possibly slightly above this level at 109.3540, which is some 17 pips below the current spot price, and it is reinforced by the 4-hour pivot point at the moment. While speaking about the first stop loss level, in case we really have the negative data for the US, then the euro might advance in value, then the first stop loss level is placed at 109.75, which is the 4-hour R2 resistance line for this currency pair for the moment. So I think I just have 1 minute to go till the data will be released and published in the chat section. Let me just shortly mention the technical indicators, which are, by the way, are pointing sideways on the 30-minute time frame right now, and as you can see from the RCI specifically indicator, it is neutral on the all time frames for the euro-dollar currency pair, which proclaims that this currency pair is neither overbought nor oversold in all the time frames for the moment. So it is also possible that we see pretty much no reaction from the data, especially if it matches the forecast of 1.9%. But let's wait for the data. We just have some 10 seconds to go till we'll see the numbers, and hopefully the first initial reaction from the euro-dollar currency pair. Yes, we just have a couple of seconds to go. And yes, actually the US GDP rose more than expected by 2%, according to the third and final estimate for the third quarter of this year, which was better than expected of 1.9%, but slightly worse than 2.1% we have had during the second revision to the GDP. And as we can see from the market reaction, there is a slight downward change on the euro-dollar, but not that strong. And concerning the personal consumption expenditures, they also rose more than expected, and possibly they were those. It was that component which triggered a better than expected revision to the GDP. We don't have that strong reaction from the euro-dollar currency pair at all, because accounts for just some 6-7 pips to the downside, and as you can see, the euro continues to go slightly down versus the US dollar, but the average reaction is obviously smaller than it was on average during the last 5 quarters. Okay, I guess that will be all from my side now on the technical part, and since I possibly will not have any news releases till the next week already, I would like to wish you all a Merry Christmas and see you on Monday. Back to you, Polina.
Thank you very much, Matt. Yeah, guys, the numbers came out slightly better than expected, and that's good, I guess. Definitely it's good. I don't know. I'm just only thinking about the Christmas mood and ho 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 and whatsoever. And I love her background cover. Thumbs up if you do. Of course you do. Cool. Okay, but Doc, yeah, I can see Kate thumbs up. Yeah, wonderful. Cool. Once again, thank you to those of you who have participated. And Doctor, I know you hear us, even though you're distracted with the hot chocolate. You're very welcome to continue with the webinar.
Thank you very much. Thank you, guys. And Merry Christmas to you. And